This chart is for shares in Marks and Spencer's group. Now, the trend had been up for some time, and then we started to form what looks like a head and shoulders formation. So, this would be a bit of a threat to their share price and would likely cause a pullback, which is exactly what happened. So, you can see here that we've put in a midline. We've connected most of the lows in this head and shoulders formation. The price got a little bit below it, but this from experience is the correct midline for this price. So what we're going to do is show you the technique again, just to really make sure you understand it. So the measuring technique, what we would do is we would look at both shoulders. We would try to decide which is the highest formed. So we're going to go with the shoulder on the left. Measure from the top of that shoulder to the neckline, maybe with a bit of string on your computer screen. And then at the point where the midline is broken, use that bit of string to measure how low the price goes. The line that we've drawn is not a valid trend line, it's just literally where this projection from the pattern was. The price got a little bit lower, which is quite common. Often price targets are just a target. Sometimes they don't quite get there, other times they overshoot the targets. It really depends on other things going on with the market at that point. One thing we would like to show you on this chart is we've had a top in head and shoulders pattern which has given us a pullback to a price target. As soon as you get to that price target, the market will then disregard that head and shoulders pattern. It doesn't matter anymore. The market starts looking forward to the next pattern. But when you get trend lines like this midline, it doesn't happen the same way. So what will happen is once you draw a trend line, that trend line should always be considered. And the market went up to that trend line and it found resistance. So it actually worked very well. When we zoom out of this chart a little bit, you can see that this is a healthy up market. So we should be looking at buying dips in Marks and Spencer's. It has had a head and shoulders and a little pullback, but this is still a very good up market. And we could probably draw a very good ascending buy line in order to work out when we should be buying these shares. If we connect a few lows, you can see that is a very healthy uptrend. Hopefully by now you can see how we use technical analysis in order to work out what price to pay for shares and what tactics to use. Just by extending a few low points, we've drawn a buying line and we'll probably get another touch of that line and we will buy shares in Marks and Spencer's. So you can see how simple you can make this. Buying into a nice steady up market, draw on buy lines and go with the buy lines, especially any long-term buy lines. This ascending support line has been in play for around a year, so you can't really put too much faith in it, but you can put enough faith in it because that is as good as an opportunity you're going to get to buy shares in Marks and Spencer's. So while everyone else is trying to buy a little mining stocks that are making lower lows, you can be doing things like this and making good profits.